All the major indices were lower today, even though the Dow Jones Industrial Average suffered the smallest decline. You can see right there. It might not join the S&P 500 and NASDAQ to finish the year higher. Now, the major themes of 2015, however, will spill over into 2016. We're talking about the free fall in oil, the strong dollar, global deflation, and, of course, here at home, slow wage growth. So, what can we expect? Let's bring in the man himself, Shah Gilani, Capital Wave Forecast Editor. All right, Shah, first let's start with this. You were bearish for most of the year, and, well, you know, it wasn't a gangbuster year. It wasn't a disaster either. So why did the market hold up the way it did?
Why did it hold up? It only held up in kind of the fact of a handful of big mega cap stocks towards the end of the year that got a momentum ride in terms of traders trying to lift the market averages. But underneath, there's no breadth here, Charles. The market is actually in pretty bad shape. I think the first quarter of 2016 is going to be a real problem for the market. So I'm still very bearish going in here. Can the market turn around? Yes, but I don't see any economic indicators that are going to push things higher. Not domestically and certainly not globally.
Okay, so we've got what's going to be the catalyst then that breaks the markets back? Will it just be sort of a new year, the Payne and all these other high-flying stocks sort of running out of room to the upside?
No, I think what you indicated earlier just now, what could break the markets back? It's the same themes that have been weighing on the market since August and all year in terms of oil leaning on markets. But commodities are in a free fall, continue to be in a free fall, and that's going to create a deflationary spiral. There is no inflation in sight, so the deflationary spiral is going to weigh on stocks, going to weigh on earnings. The stronger dollar, now that the Fed is presumably going to continue to raise rates, that's going to weigh on international earnings. And I think all those things, those two things combined, are going to put a heck of a lot of weight on the Dow, on all the averages. And again, underneath the big cap leadership, probably 50% or just a little over 50% of the stocks in the market are trading below their 50-day moving averages. There's no breadth here. It's scary underneath.
You're right, and I'm pretty sure more stocks close near 52-week lows for the year than highs. But having said that, I think some opportunities have been created myself. I like consumer discretionary. I think the cybersecurity stocks will rebound. Biotech, I think, will rebound also. And I'm looking at these solid blue chip names for 2016. So those are areas I'm looking to rally. Are there any niches in the market that you think should go up?
Well, I think you're right. I think the solid dividend-paying companies that are, global in nature, that can withstand a stronger dollar in terms of their international earnings, that are also doing well domestically, they will hold up. So I think it's going to be about defensive stocks in early 2016. We'll see how the rest of the year rolls out. But early 2016, I think, is going to be a real problem. We're going to find out whether there is anything behind this recent rally that pushed stocks. We're about 748 points from the all-time highs in the Dow, and we're about 600 points from 17,000. The Dow. If we get to 17,000 before we hit new highs, it's over. We're going to see the August lows again and probably break below those.
I'm going to give the audience a stock I like. Is there a name, though, amongst all of this positivity that you like?
We're hanging on to Microsoft. We've got a few blue chips like Microsoft that we like that are good dividend payers and are strong cash positions.
All right, folks. And I like InterDigital. It's a $50 stock. I think it's going to go to 75. Shah Gilani, he's one of the best out there.